This is Chapter 4, Part 2. Now we're going to walk through a multi-step and single-step income statement. Now we've already went over in Part 1 the elements of the income statement. We have what we call operating income, and then what we call income from continuing operations. Then we have the items that are always shown net of tax, such as discontinued operations, and then other comprehensive income. So let's look at a financial statement. So again, operating income includes elements that are directly associated with an ongoing operation and shown pre-tax. Then we have other income and expense, which is items that are incidental, but such as revenue, interest expense, or gain or loss on investments. Then we get income from continuing operations. And then we show our discontinued operations. Again, these are all net of tax. And usually we isolate out any gain or losses the company made, and any gain or losses on selling the assets. And that's always shown net of tax. And then last we have the infamous other comprehensive income. And remember, when we do earnings per share, we never do them on other comprehensive income. We will do it on net income. We will do it on income from continuing operations, discontinued operations, and then the total would be based on the 1,000,043. Okay, so just remember that. Now, multi-step income statement. You list expenses based on how closely they relate to the generation of the core revenue. This tells investors if you're making money in the business that you're in. And it's important that you know how a company is generating profit to estimate future success. Now, under GAAP, there's no minimum requirements. The SEC regulations require expenses be classified by function, versus the international standard, which allows expenses to be classified either by function or by natural description. I don't know what that means. Okay, and then bottom line of the income statement usually is called either net income or net loss, but bottom line of the income statement is either profit or loss under the international standard. Now let's take a look at this example. We have an example where we're showing all kinds of activities during the year, and this is an adjusted trial balance. And now what we're going to do is we're going to go through and analyze it and create a an income statement. So here's something to remember. We'll talk about this later. It's unrealized gain occurs when there is an adjustment to fair market value of available for sale securities. They're securities that are held longer than 3 months. Now, the depreciation error would be an adjustment to beginning retained earnings, and the stock information is going to be used to determine earnings per share. Now, the first thing I like to identify is the items that would be included in gross profit, which would include our sales returns, and our cost of goods sold. Now we can do this portion of the income statement. Now we have gross profit. Now let's determine our operating expenses. It would include our selling, our administrative, and our restructuring costs. So now we're going to take our selling, administrative, and restructuring costs, and now we have income from operations. This number tells you if a company is making money in their business. Now, we talk about in the textbook what they call non-GAAP earnings, which a lot of companies like to use. And what they do is they exclude restructuring costs as an example. Now, we're going to identify and determine other income and expense, and so we can do net income from continuing operations. So, we're going to do the interest revenue, interest expense, and the loss on the sale of investments. That means we actually sold something. So we're going to take our other, and now we have income from continuing operations pre-tax, and then we determine our tax at our 40% tax rate, and now we have income from continuing operations. This would be your net income if there's no discontinued operations or other comprehensive income. But in our case, we have none. So now we're going to identify and determine if there's any items associated with discontinued operations, and there are. We have a gain on the sale of the assets, and we have a loss that was recorded until the item was sold. So we're going to do discontinued operations. Remember, net of tax. And so we're showing the assets and the loss, and we have a net amount of 504 that would be added to net income. Now we're going to look for other comprehensive income. We have unrealized gain, and we have foreign currency adjustment. So now we can adjust for that, and we have now comprehensive income. And there I'm showing you how I got them, because these are always net of tax. Now, earnings per share. Remember, you do not use any of other comprehensive income items determining earnings per share. So, we first determined the average share of common stock. We had 1 million for the whole year, and we had 400,000 for half the year. So we have an average of 1,000,002. So to get earnings per share from continuing operations, we would take the 32.91 and divide by the 1.2 million shares to get 274. Then we would determine the earnings per share based on discontinued operations, and we get 42 cents. And that gives us our total earnings per share on net income of 316. Again, you do not do other comprehensive income when you're doing earnings per share. Now the single step. The single step, we include all the revenue together, all the expenses together, but these are always the items that were always pre-tax. Then we show discontinued operations and other comprehensive income the same way. So, again, with the single step, you get the same numbers, but you still have to isolate discontinued operations and other comprehensive income. And that concludes Part 2.